back to another weekly episode. So, all the questions from the previous episodes were answered. Last week, I did not do an update because nothing majorly had changed. So, this video will be divided in two parts. In the first part, I'll just open up some sector charts for you. And then I'll take you through some names. And as I open the names of those stock charts, I'll also open up charts that have been shared by Mark Minervini and William O'Neill. And you'll see how these things keep repeating again and again in the market. And then, of course, I'll also speak about a couple of things about investments being pushed abroad. That is, a lot of people are giving advice about Indians should go out and invest in other stock markets as well. So the first chart is this is of the two-wheeler auto space. See, whenever you look at the auto sector, you have to differentiate between whatever is happening in the two-wheeler space compared to the four-wheeler space. If you look at this chart, this is a equal weight index for the major two-wheeler stocks. And this chart is a beautiful chart, whether you look at from the weekly time frame or even daily time frame. Beautiful relative strength. Now I'll flip this chart and I'll open up the four-wheeler space. Look at this. There is clear distribution in the four-wheeler space. Even now, you're not seeing a major pickup happening. Whereas the two-wheeler space is where you are seeing a lot of demand. So if you're someone who invests in the auto sector, you need to look at the two-wheeler space first. Then you can look at some of the stocks from the four-wheeler group. This is the IT index daily time frame. I'll open up the weekly time frame chart because we are doing a weekly episode here. The relative strength is falling. IT index now is down, I think 36%, 39% from the 2024 top. A lot of calls about why our IT industry is not going to do well. See, for a contra investor, this is a blessing in disguise, because if you look at from trailing valuation point of view, IT valuation now is at March 2020 level. This is how deep the correction has been in this particular pocket. Now, the call you have to take is whether IT sector survives from here or AI is going to disrupt it so much that earnings will start to get impacted. If you look at the previous crisis that our IT sector has gone through, whether it was through the dot-com bubble or whether it was when the sector did not migrate fast enough into the cloud computing space, all these stocks have been done in the past as well. And then look at what IT sector did. So don't have a blanket kind of a view in terms of the entire sector and the companies in this sector not performing. Have relative strength chart. This is a chart against Nifty. You can do it against Nifty 500 if you want a broader kind of view. But look at the names in this sector. Some of the smaller IT companies are starting to pivot. So it's completely up to you. This is not an investment advice. Nothing that is being spoken here in this episode or whenever I make a video as an investment or trading advice, you need to consult your financial advisor. Then comes the pharma space. Pharma is pretty interesting. This was the flag I had pointed in 23. This was in the pharma sector. Now, after this base, there is one more base getting formed in the sector. And it is pretty interesting because this is a pocket where traditionally a lot of people don't participate. I also don't participate that much in pharma sector. But the new age pharma companies are a bit different. And I would tell you that some of these companies, they do have an interesting business model, some products, especially around diabetes, around weight loss. Weight loss is a big industry these days, especially when you go to Instagram and you look at all the stupid people showing off whatever they're doing. And, a lot of people are promoting weight loss drugs that is abroad, and this trend is going to come to India because diabetes and obesity is such a big thing here. Most of the people are working 9 to 9. They're sitting on their chairs, they hardly walk, no exercise, they have significant belly fat. So it's understandable also. A lot of young parents who don't have time to manage kids, and they have jobs to attend to, they also have a complicated life. So health is taking a big hit here. So some niche companies that are into this weight loss product, diabetes, stage 2 diabetes, look into these companies. There are some companies that have dedicated vaccines also. All right. So look into these companies, not the traditional names, some new age companies in this particular sector. Beautiful pattern, but on a higher time frame chart. Mid and small cap, healthcare. Again, so not the traditional large cap indices, the stocks that are there in that. Look at this. The smaller pocket names are doing exceptionally well. They're setting up. So you're not missing out, especially if some of you are looking into this sector. Look into these smaller names. You'll find a lot of opportunities. Nifty IPO Index. This is a base getting formed. If you look at a long-term chart of BSE IPO Index, let me see if I can pull that out for you. BSE IPO Index, if you look, there's a beautiful base getting formed. This is something I've been repeating for such a long time, ever since the market started correcting. Look at the new age IPO companies. There are some fantastic businesses out there. I'll come to this towards the end when I talk about this global investment theme picking up. Same with EV and new age automotive companies. Handful of stocks are there. Three major stocks were giving beautiful VCP patterns. All three of them are up 37-40% in a month. That is ever since the market started moving up. Microcap as a space, again, this is a big base. So within the SMID space, the mid to small cap segment has done a lot better as you compare with even the micro cap or the large mid cap space also. And large cap, of course, is not doing that well. This is the digital. The same remark remain for the IT sector overall. This is Nifty India Defense. I don't even want to talk about this index because I've repeated about what is happening in the defense and capital market to an extent so many times that it would be boring by now. Small cap, again, this is a long-term base getting formed. Energy, I've spoken about this sector. I generally don't trade this, but energy has given a beautiful breakout post a contraction right at the 30 weekly moving average. Look at the relative strength. Look at the breakout. This is classic Stan Weinstein structure. When you see pullback, look into the space. Some stocks, smaller stocks, again, that is the theme in the market currently. Small cap, not that much, but if you look at the mid to small cap space, that is where a lot of activity is currently happening. Hotel sector, this is a stage 4 kind of distribution that is still going on. Auto overall is not great, but it is skewed only because the two-wheeler segment is doing well. CPSE, I've spoken so many times. Look at the beautiful Minervini contraction. Right at correction, this was going on. This sector is staged to do exceptionally well. Nifty overall, if you see, it is just facing resistance at the previous points, previous support becoming a resistance. And large caps are struggling, which will in general bring about more volatility in the broader market segment also. This is Nifty Midcap Select, again, very close to an all-time high. So there is a specific kind of pocket that is doing very well in the market. Infra sector, again, look at the relative strength. This is clear accumulation happening. This is a long-term structure that is forming. All you have to do is go to niftyindices.com, find out which stocks are there in the sectors I'm opening up and see which stocks have better relative strength than this. Those are your picks. It is as simple as this. This is for those who are not good at bottom-up analysis in terms of picking up stocks for investment or trading. This is the hospital index. Again, this is forming a base. Why hospital index? Always pay attention to a sector where PE funds are investing money. This entire sector, this entire healthcare space, hospitals, it's now become a business. If you go to a hospital, God forbid, you'll realize the kind of facilities they offer these days. I mean, it is ridiculous to say the least, but that is what happens when PE funds enter a particular space or a sector. Then this is manufacturing index. Why do you see so many engineering stocks and these are doing well? Because these are trading near all-time high. Look at the relative strength through the correction. All right. All these charts that I'm putting up, I'll put up examples from William O'Neill's book as you keep seeing these charts, and you'll see how similar these charts look. And then you will probably understand why during a market corrective phase, I was repeatedly asking you to look at strong relative strength charts, pockets. Private banks not doing that well. A couple of base failures have happened here. They're currently out of favor. But valuation wise, if you look at Nifty private sector banks also, of course, I cannot take individual names. You can easily research through ChatGPT or Claude or through your financial advisor. A lot of major private sector banks are very close to their March 2020 valuation levels. So it'll be interesting heading into 2026 if global markets remain stable, whether buying again returns to this segment or not. Consumption, again, not great relative strength, but this is a long base getting formed. Probably in the next couple of years, you'll see some action coming in this particular index. MNCs, again, a lot of MNC stocks are doing well, so this is not a surprise. Look at Midcap 150. This is where the buying is happening. All-time high, again, very close to all-time high. This is a beautiful long-term base here. If you look at monthly time frame charts, you'll just see this as a flag. Can you see what a beautiful flag this is? So sometimes after this particular run, and this is a point I'll make when I speak about the advice that you're getting these days about pulling money out of India and putting it in different markets. If investors don't have the patience to weather this kind of price movement for a couple of odd years, they will never realize this. It is very simple. It is not rocket science. You cannot time the market to the T in terms of coming in only in pockets that are moving. Let it be anything. Nowadays, the AI theme that is attracting so much of discussion, nowadays that theme is not working. Now what? Do you abandon that theme? No. So market works in cycles. That is my point. So the transport and logistics index, again, relative strength is not great. I would probably not look at it. This is the insurance pocket, a flat relative strength, and that is being reflected in the price. Overall mid-cap space, again, beautiful Can you see the difference between Nifty Midcap and Nifty 500? So broadly, if you see from long-term point of view, this is a broad range we are currently into. This is not a clear-cut bull market that we are currently going through. This is a contraction kind of a market in a broad range. That is, broader market will remain in a range, but within that broader market, there are some fantastic themes that are there that are in an amazing stage two kind of bull market. That is the kind of market we are currently into. Banks are struggling mainly because of private banks. Capital market. Now, what do I say about this? I mean, what a beautiful breakout has happened, and this is a multi-decadal theme. Defense and capital market is our very own AI moment. I won't repeat this point again. Commodities again, lifetime high. Metals is at lifetime high. Nifty housing. Some interesting stocks are in this segment. Look at the relative strength. This is the rare earth index, again at all-time high. This is an index I've shared with you earlier also. What is this? This is nothing but on a higher time frame chart, a cup and handle variation breakout. Okay. You'll see a lot of charts from William O'Neill's book as this video progresses. This is a cup and handle breakout. And most of the charts that I'll put out from his book, you will see exact replica that is there here. All right. Realty index is beaten down. Realty index, after the reforms, there is still some skepticism here, because if you ever go out and try to buy a property in India, even through some really good builders, they'll use the word component. Component means, so please pay this much this way, rest of it do it in a component basis. Component means you pay them cash. That is happening even today, even despite of all the reforms that are there and digitization. And of course, you understand these things won't go away so soon from India. But one of the reasons that the true sales kind of does not realize in earnings is also this. I'm not accusing any company of it. There are some good ones, of course. I don't want to take any name here, but if some of you have gone out to buy properties, these kind of business propositions are always made to you. Then comes the consumer durables, too erratic in terms of relative strength. PSU banks, I would still say, despite of the recent pullback, this is a beautiful RS structure. It's just biding some time. Probably it'll be in a range and then probably break out. Metals, lifetime high. Metals, I've repeated since 2025. This is a wonderful index to be in every pullback. It gives you pullback. It gives you opportunities. It is volatile, but again, if you don't have volatility, then everybody would be able to ride the trend easily. Now, I link couple of things with the global investment theme that you hear these days. So while speaking about this, I'll open up some charts. Those charts are not investment advisors, and those trades are now already over. You cannot get into stocks that have risen 70, 80% in a month. All right. So from education point of view, this is being said. So let's take up an example. If you go through some defense names or some capital market names, let's say you had those sectors in your watch list and you traded some of those stocks. What has happened? Again, O'Neill charts I've shared earlier also throughout the videos. Those charts will be coming up. So open up a chart. Axis Gates. How much is it up? It is up 63% in a month. I want you to focus on these numbers. And at the same point, look at the relative strength, because this is what O'Neill has taught. These trades are over, guys. You cannot get into these stocks now because there is no risk reward here. Again, these are just examples. Look at MTR Tech. What has it done since India's bull market was supposedly dead? I'll open up daily because the dates will be easier to put up. So this is a base at 50 DMA. It is up 89%. You look at other defense sector stocks. Look at this. Apollo Microsystems. And I'm not handpicking because these sectors I've spoken about so many times. Look at large cap names. Look at Bharat Forge. I mean, any stock that you pick up in the defense sector has rallied roughly between 35 to 50, 40%. Why I'm bringing this point is because you need to have focus when it comes to capturing trends in the market, when it comes to identifying opportunities in the market. Else, you will always keep wondering whether something good is happening in our country or not, or these things are not going to work this time. There are some fantastic opportunities that are there in the US market. You look at recently listed names also in the capital market segment. What has happened? This is a V-shaped takeoff. So if your attention is towards global stock market, if your attention is towards putting your money elsewhere, you will never be able to realize the opportunities that are there. This is just an exchange stock. It's up 20% in 1 month. And look at the relative strength of this stock. The point that I again and again try to emphasize every week, I'm not criticizing any stock market. This is not about nationalism or being patriotic. It is about being pragmatic. You, as a local citizen of this country, can understand a lot of things that foreigners cannot. You are seeing the reforms happening. You are seeing the regulatory authorities doing their job properly. Just criticizing does not help. If you want to criticize, then you should be seriously worried about what is happening in the US, SEC. Their regulatory authority is not even able to put their finger on the massive corruption that is going on in stock market. Just by news flow, a handful of people are taking positions and they're betting big and making money. What is that? If that is not corruption, that is the pinnacle of corruption that you're seeing. All right. So whoever is coming and advising you to, again, an exchange stock, what has happened? This is not random movement. This is a base at 50 DMA, a breakout, rising relative strength, classic Stan Weinstein up 30%. Please understand. So while the correction was also going on, when I was making this point about putting your money in India, one of the points I used to get in comments, and some people are really obnoxious when they want to comment about being a government supporter or being a blind bhakt or whatever language they use. These are this petty people. I don't even reply to them. The point is not that. The point is about focus. If you're not focused, you are not going to achieve anything. You cannot track US market the way you track Indian market. Never forget that. Unless and until you have so much of money, let's say you have 50 crores, 30 crores you put in India and 20 crores you put abroad. By the way, the limit is that much that you cannot put that much money, but hypothetically, I'm making a point. If you want to diversify, there are assets here. There are plenty of ETFs here. There is gold and silver. There are other assets. Probably there are some fantastic mutual funds. You can do it. But the way you understand India, nobody else will understand India. Even people staying abroad, that is our fellow people who are staying abroad, will not truly understand what is going on here. Because day to day, you are seeing things. And when the point is made about you putting your money in India and remaining in India in terms of investment, it has nothing to do with anything else except the businesses here. Are you telling me the way you understand a defense market, defense sector, that is, or a capital market sector or an infra sector, somebody else sitting abroad will understand that? No. Then why this is being pushed through that so much of investment you should make abroad also? Because there are so many funds that are doing this. They need money. Money brings in management fees. Management fees runs in crores. You cannot imagine the net worth of these people. So have some common sense. I'm not against anybody advising you anything. Your financial advisor can tell you whatever he wants, and it's up to you to listen. But you are staying here. If after staying here, you have given up completely on whatever is happening in this country, then of course you're free to do what you want. But if you have belief, or if you are good at reading historical charts and go through every crisis that India has gone through right from the 90s, and then still you see our stocks massively compound, then you have to rethink that why this sudden push is being made towards taking your money abroad and investing your money there. And let me tell you, this is also sadly being done by so many veterans of the market who 3 years earlier were saying India is the best investment destination in the world. So what has happened in 3 years? So I would tell you that between March and April itself, there are so many stocks in defense, in capital market, in new age IPO businesses that have gone up 40, 50%. Ask those people how many of the stocks that they have picked up in US has gone up that much. AI theme is what is being used around so much, right? Ask them. It is your money. Your money means your research. There is nobody in this world who's going to love your money as much as you do. People will love the commissions out of your money. People will love the fees they get out of your money. But they will never love your money the way you love your money. So ultimately, it is your choice. The key to stock market has already been given by Stan Weinstein and William O'Neill. Stan Weinstein wrote his book in 80s. William O'Neill in early 90s, then he has published so many books since then. Then came Mark Minervini, who since 2009-10 has done so much to educate people. In between, there was David Ryan. He was mentored by the great William O'Neill. He has been saying so many things for so many years, and just look at the replica that I've put out in terms of chart patterns. These things work, provided effort is put in day out, every week, tracking RS charts, tracking sectors, doing the basic work and basic money management skills that these guys have taught. Anything and everything that I repeat on this channel is the teachings of these guys. There's nothing original I have to share. But when I see the market through their lens, I can see a lot of things happening. The new age IPOs that I was talking about, that pick up your mobile phone, see which apps you use. Did you see what has happened to those stocks? There are some apps that we all have in common. Look at those stocks, 30-40% up. Who has taught you this? This is teachings of Peter Lynch. What Peter Lynch has always said, whatever you use, pay attention whether the data is aligning or not. If the data, that is charts in this case, are aligning towards an uptrend and you use those products and you find those products great, what is the problem? So I would tell you that I don't have any investments anywhere outside India. And I will never buy anything outside India because from whatever little knowledge and common sense I have, I understand few things here. That is why I keep everything here. I don't even comment on the US market because I don't understand what is happening in the US market. I stay here. And despite of all the problems that are there, all the things that you hear, I'm still very optimistic about markets because I'm not a short-term player. 2 months of 3 months movement does not matter to me. It is all about long-term. Wealth is made over long-term. And long-term, I'm not saying 20 years. These days, cycles are shorter. In 2-3 years, you can make serious money if you know where to look at. All right. So have a great weekend ahead, guys. I'll see you in the next one. Take care and be safe.